Hello, everybody. Today is Monday, August 22nd. Welcome to today's episode of the Daily Dose. We saw the stock market continue selling from Friday after it bounced off that trend line we've been looking at for quite some time now. The S&P was down just over 2%, the NASDAQ was down over 2.5%, and the Dow was down just under 2%. So Monday's losses completed the biggest two-day declines for the NASDAQ and the S&P 500 since June when we saw the market lows. Last week, the indexes lost ground for the first time in 4 weeks. That was their longest weekly winning streak since November 2021. And this drop in markets comes ahead of a busy week for economic news with the Federal Reserve's key Jackson Hole Symposium. I can't pronounce that. Symposium set for Friday. The same day, investors expect updates on inflation data and consumer sentiment. So we really saw what looks like a continuation of the bear market. It's kind of starting to look like that rally we saw from June through the end of last week. It looks more like a bear market rally now. Looks like we're kind of continuing in this bear market in this environment that we're in. So let's take a look at the S&P 500 to see what I mean. This is the trend line that we've had on the S&P 500 since the beginning of the bear market. It came up after one leg and touched, came back after the low in June, after a second leg down and touched, and now it looks like we may be starting a third leg lower. So we're right in that zone where we thought it would come to after it broke through our top zone right here. If we break through this 41.16 level, I expect it to come back down. Obviously, the 4,000 could be a level of psychological support, but really there's no other real support there. You can see on the last sell-off, it just broke right through the 4,000 level, actually broke right through this zone too. But if there is going to be some support, we'd expect it maybe even somewhere from the 4,000, but more so from the 39.68 to the 39.32. That's where we'd expect some buying support if there is any. And then after that, it really opens up the lows from June. So that's what we're looking like on the S&P 500 right now. We're still, as you can see, this is going to be the trend line to look at. Eventually, when the market comes back up, this will be the trend line we'll be looking at. I think this will be a key indicator now that we've respected this twice and it really started at the top of the sell-off. I think that this is going to be a huge indicator that this will determine when the bear market is over. Technically, we'll see this get broken through, and let's just throw up the moving average. Let's just have that up there so you can see the moving average is actually right in line with this zone right here. So it looks like it could make a move back down to here. Maybe the moving average will be back near 4,000 by the time it gets there, and we get a little support right there. But we'll just have to see. Bitcoin is right in this range, in the top range of this zone right here. If it breaks below this level of 20,815, we'll head back down to the 19,000 to 18,000 level. If we break through this bottom wick here of where is that exactly? About 17.7. It opens up what we were talking about over the weekend. It'll open up this right here. So the next line of any sort of support we'd see is at 11,000. So really don't want to see Bitcoin go through 17,000 because that'll open up 11,000, 10,000, 9,000, which would push a lot of people out of Bitcoin. But it would be a great buying opportunity. But yeah, that's over 50% down from here. So definitely don't want to see that. But that'll do it for today. We saw a continuation of the selling today. Looks like the bear market is not over after all, just like we had predicted on the channel. Be sure to stay with us for the rest of the week. And as always, thank you for listening.